to the salesman, we're interested in your home, we're interested in buying one, and what is the procedure? Is there an application to be filled out? So forth. So he looked at me, looked around, and he said to me, he says, listen, it's not me, but the owners of this development have not as yet decided to sell these homes to Negroes.
Would you rather be black and live to be 100 or white and live to be 50?
Most people think segregation in America was just personal choice. Like people naturally separated themselves. But that's not what happened. The truth is, it was by design. And one of the clearest examples, a place called Levittown, a suburban dream with thousands of homes and not a single black family allowed. Welcome to the history of the Federal Housing Administration and how the U.S. government used public funds to engineer racial segregation. To understand the discrimination, we have to understand the context of the Great Depression. In 1933, the U.S. economy was shattered. The housing market was in free fall. People were losing homes. New construction stopped. The response? Franklin D. Roosevelt's New Deal. Congress passed the National Housing Act in 1934, creating the Federal Housing Administration, or FHA. Its goal was simple: get the housing market moving. They insured mortgages, which meant banks could lend money without taking huge risks. Suddenly, millions of Americans could afford homes. Sounds like a success story, right? Well, not exactly. The FHA wasn't just backing loans, it was deciding who got them. And it did this using a powerful tool, redlining. The FHA, working with the Homeowners Loan Corporation, created color-coded maps of over 200 cities. Neighborhoods were graded on risk.
So that those communities that were all white, suburban, and far away from minority areas, they received the highest rating, and that was the color green. Those communities that were all minority or in the process of changing, they got the lowest rating, and the color red. They were redlined. As a consequence, most of the mortgages went to suburbanizing America, and it suburbanized it racially.
Perhaps the most famous example of this FHA architecture is the Levittown suburban housing developments created by William J. Levitt and his company, Levitt & Sons. The first of these Levittown subdivisions was built in 1947 on Long Island, New York. It was the first mass-produced suburb in America, consisting of some 17,000 detachable, low-cost homes. It was marketed as an affordable utopia, but only for white families. Because if even one black family moved in the neighborhood, the property value would plummet.
The FHA underwriters warned that the presence of even one or two non-white families could undermine real estate values in the new suburbs. These government guidelines were widely adopted by private industry. Race had long played a role in local real estate practices. Starting in the 1930s, government officials institutionalized a national appraisal system where race was as much a factor in real estate assessment as the condition of the property. Using this scheme, federal investigators evaluated 239 cities across the country for financial risk. When the white residents of 8 Mile Road in Detroit were told they were too close to a black neighborhood to qualify for a positive FHA rating, they built this 6-foot wall between themselves and their black neighbors. Once the wall went up, mortgages on the white properties were approved. Between 1934 and 1962, the federal government underwrote $120 billion in new housing. Less than 2% went to non-whites.
White families, backed by the FHA, built massive home equity. This equity was later used to fund college educations, start businesses, and provide down payments for the next generation. Black families, locked out of these appreciating assets, were often forced into overpriced, neglected housing or contract buying, which built no equity. When we talk about the massive racial wealth gap in America today, this history is the primary driver. The consequences are devastating and compound with every generation. The FHA's practices did not go unchallenged. Legal pioneers like Charles Hamilton Houston and organizations like the NAACP launched decades of lawsuits. While cases like Shelley versus Kraemer in 1948 made racially restrictive covenants unenforceable, it wasn't enough. It took the pressure of the civil rights movement and the assassination of Dr. Martin Luther King Jr. to finally force change. In 1968, exactly 1 week after Dr. King's murder, President Lyndon B. Johnson signed the Fair Housing Act. The 1968 Act made discrimination in housing illegal, but changing the law did not erase 34 years of systematic exclusion. The map of spatial inequality that the FHA drew remains remarkably intact. Today, the wealth gap persists, and home ownership rates still show stark racial disparities. The history of the FHA teaches us that the opportunity to build wealth in America was never distributed equally. It was, from the beginning, built for some and deliberately structured against others. We must remember this history, not just to understand our past, but to address the inequality of our present. The blueprint was federal. The solution must be just as systemic. Thanks for watching. For more dives into history and economic policy, subscribe to the channel